I'm Deborah Borchardt, and this is your midday market update. Well, the indices are all in the red across the board, and we've started to see the selling kind of pick up some steam as we go into the midday mark. I'm joined by Mark Newton. He is the chief technician over at Grey Wolf. So, Mark, you know, what we were just talking about is some of the things that we're seeing that are really down today: transportation, energy. And you were just talking about how the commodities kind of had started to roll over, and that's affected these groups.
I think that's right. I mean, you saw a big bounce in commodities into July, but recently you've seen commodities be down now for the fourth straight day. And so that's affected a lot of the energy, a lot of the materials, a lot of the industrials type sectors. So that's something to watch. The other thing is that emerging markets continue to be under pressure. Although U.S. indices have moved to new highs, have exceeded May highs, most of the emerging markets in Europe have not followed the same pace. So there is a pretty big divergence. And yet indices are still up, a decent amount, 18% or so year to date, and over 5% for the month of July with 2 days to come into a very action-packed week with regards to the Fed. We've got non-farm payrolls, and right in the midst of earnings season, a little bit of a slowdown, deceleration of earnings, and that's definitely a concern. And people are questioning whether the economy can in fact grow to help the Fed meet these targets that would justify tapering, which we haven't really seen signs of. So there is some concern with the Dow having been up almost 1,000 points or so in the last 5 weeks since late June, and the S&P is still up over 100 points since then. And we're definitely stalling out a little bit. We're overbought, and the breadth hasn't been the same, and we're seeing a little bit of evidence today of financials starting to pull back along with energy.
Well, that's what I was going to bring up too, is when you started talking about that we're at the end of the month, maybe some of these PMs have, wanted to lock in some of their gains, because we have had a pretty good month up until this point, and maybe it's better to just kind of lock in your gains, sell off some positions, and get ready for August.
Everybody's got their own strategy, but we're certainly in what a lot of people would call the dog days of summer, where things are much slower, and so volatility can be exacerbated sometimes, and a little bit of a slowdown, and the markets are up 18% coming into a seasonally very tough period of the year where there's still a lot of uncertainty with regards to how is the Fed going to accomplish this tapering when the economy really isn't improving to the extent that they want, and a lot of uncertainty with regards to earnings as well. So that might be a viable strategy, who knows.
All right, sounds like a good idea to me. Let's just sell and take August off. That's Mark Newton from Grey Wolf, and I'm Deborah Borchardt with The Street.